I've been watching something develop over the past few weeks that reminds me of 1989. Back then, the Berlin Wall fell, the Cold War ended, and most investors completely missed what happened next. European stocks, especially energy and industrial companies, they went up 200%, 300%, some even more over the next few years. And the reason was simple: peace. Peace changes everything in ways most people don't understand until it's too late. Today, we're seeing the early signs of something similar. Putin and Trump, they're talking about a ceasefire in Ukraine, maybe a full peace deal. The Russian gas transit through Ukraine stopped on January 1st, and European natural gas prices spiked to over 51 euros per megawatt hour, the highest since October 2023. But here's what's fascinating. Since mid-December, prices have fallen 45% for the year, down to around 27 euros. The market, it's already pricing in peace that it's already betting that Russian gas will flow again. And if that happens, if those pipelines reopen, European energy stocks are going to explode. Now, I want to be very clear about something. I'm not predicting when this peace deal will happen. I can't. Nobody can. Trump says he wants it done in months. Putin's talking about ceasefires and security guarantees. Zelensky's under pressure. The pieces are moving. But timing is impossible to predict. What I can tell you is this, that if peace comes, when peace comes, the energy market in Europe will transform overnight. And the stocks positioned for that transformation, they're trading at prices that don't reflect what's coming. That's the opportunity. Let me walk you through what's happening right now, what peace would mean, and which stocks could make you wealthy if you position yourself correctly before this happens. Because once it's obvious to everyone, once the peace deal is signed and announced, it'll be too late. The stocks will have already moved. First, let's talk about where European natural gas prices are today and why they're so important. Right now, European benchmark prices are around 27 euros per megawatt hour. That's down dramatically from the 300 euros plus we saw in 2022 during the worst of the energy crisis, but it's still double the pre-war prices of 2021. And here's the key. Europe is paying about 4 times what Americans pay for natural gas. 4 times that in the US. Natural gas is trading around $3 per million BTU. In Europe, it's over $12. Why such a huge difference? Because Europe lost its cheapest supplier, Russia. Before the war, Russia supplied 35% of Europe's natural gas through 4 main pipelines. Cheap pipeline gas, reliable, abundant. When that stopped, Europe had to replace it with liquefied natural gas, LNG, shipped from the United States, Qatar, Algeria, Norway. And LNG is expensive. It has to be cooled, liquefied, shipped across oceans, then regasified. The infrastructure costs are enormous. The shipping costs are enormous. Everything about it is more expensive than pipeline gas. So Europe's been paying premium prices for 3 years now. And European industries, manufacturing, chemicals, utilities, they've been struggling. High energy costs make European companies less competitive globally. Some factories have shut down. Some have moved production to other countries. Germany's industrial sector has been particularly hard hit. Their energy-intensive industries like steel, aluminum, chemicals, they need cheap natural gas to compete. Without it, they're at a massive disadvantage. Now, here's where peace changes everything. If there's a ceasefire, if sanctions get lifted or eased, Russian pipeline gas could flow to Europe again. Not immediately, not overnight, but within months. And Russian gas is cheap, much cheaper than American LNG. It's right next door. It comes through pipelines that are already built, already in place. Nord Stream 2, the pipeline that was never fully activated because of the war, it's sitting there, damaged by sabotage. Yes, but the Danish Energy Agency just approved preservation work on it in January. They're keeping it functional. Why? Because everyone knows what's coming. If Russian gas returns to Europe, prices will collapse. Not to zero, but down significantly. Analysts are already forecasting European natural gas prices could fall to €9 to €10 per megawatt hour by late 2026 if Russian supply resumes. That's a 60% to 70% drop from current levels. And think about what that means for European energy companies. First, the obvious winners. European utility companies. Companies like Germany's EQNR and RWE, France's TotalEnergies and Engie, Italy's ENI, Spain's Repsol. These companies have been crushed by high energy costs. Their margins compressed, their earnings down. But if natural gas prices fall 60%, their costs fall 60%. Their margins explode, their earnings explode, and their stock prices, they'll follow. Let me give you some numbers. TotalEnergies, France's energy giant, it's currently trading with a strong by consensus and 31% upside to fair value according to analyst estimates. The stock offers a 2% dividend yield backed by 49 years of uninterrupted payments. But here's what analysts are missing. They're pricing in current energy prices. They're not fully pricing in what happens if Russian gas returns and European gas prices collapse by 60%. If that happens, TotalEnergies' refining margins improve dramatically. Their downstream operations become much more profitable. Their earnings could increase 40%, 50%, maybe more. Or look at Italy's ENI, trading at 9% dividend yield with 33% upside to fair value. ENI has significant natural gas operations in Europe and the Mediterranean. Lower European gas prices would reduce their operating costs while they maintain revenues from long-term contracts. Their profit margins would expand significantly. The stock could easily double if peace brings cheap Russian gas back to Europe. Spain's Repsol is another one. It's already up 30% this year, but it still has 39% upside to fair value. Repsol's refining operations in Spain would benefit enormously from lower energy costs. Spain has been importing massive amounts of LNG to replace Russian supply. If pipeline gas returns, Spain's energy costs drop, Repsol's margins expand, and the stock has room to run much higher. But here's where it gets really interesting. The companies that would benefit most aren't just the big integrated energy companies. It's the utilities, the companies that generate electricity using natural gas. Companies like Germany's Uniper, E.ON, RWE. These stocks have been beaten down for years because high natural gas prices made their gas-fired power plants uncompetitive with renewables and coal. But if natural gas prices fall by 60%, suddenly those gas plants become extremely profitable again. And there's another angle most investors are missing. European governments have been pushing hard for renewable energy to reduce dependence on fossil fuels. Wind, solar, batteries, massive investments. But here's the reality. Renewables are intermittent. The wind doesn't always blow. The sun doesn't always shine. You need backup power. And the best backup power is natural gas. It's flexible, it's reliable, it can ramp up and down quickly to balance the grid as renewables fluctuate. So even in a future with lots of renewable energy, Europe still needs natural gas. Lots of it. And if that natural gas becomes cheap again because Russian pipeline supplies return, the entire European power generation model changes. Gas plants become the backbone of the grid, supporting renewables, and the companies that own those gas plants print money. Now, let me talk about Norway for a moment, because Norway's been the big winner from the Ukraine war. Norway's Equinor, it's been supplying about 30% of Europe's natural gas since Russian supplies stopped. The company's been making enormous profits. And the stock, it offers a 12.9% dividend yield right now, highest among major European energy companies. But here's the question. What happens to Equinor if Russian gas returns? Does the stock collapse? Will Norwegian gas get priced out of the European market? The answer is no, and here's why. Europe learned a hard lesson from this war. Don't depend on one supplier. Diversification, energy security. Even if Russian gas returns, Europe won't go back to the old model where Russia supplied 35% or 40% of their gas. They'll want multiple suppliers. Russia, Norway, LNG from the U.S., and Qatar, pipeline gas from Algeria and Azerbaijan. They'll want optionality. So Norwegian gas will still be needed. Equinor will still sell into Europe. The difference is competition. If Russian gas returns, it puts downward pressure on prices, which hurts Equinor's margins. But Equinor has one of the lowest cost production bases in the world. Norwegian gas comes from shallow water offshore platforms with decades of infrastructure already in place. Their break-even costs are very low. Even at lower prices, they're profitable. And here's something else. Equinor is expanding globally. They just signed deals to buy LNG from Cheniere Energy in the U.S. and sell it to India in a 15-year agreement. They're positioning for Asian demand growth, not just European. So even if European prices fall, Equinor has global growth drivers. The stock offers 12.9% dividend yield and 21% upside to fair value. That's attractive no matter what happens with Russian gas. Let me shift gears and talk about the timeline, because this is critical for investors. When does peace happen? When do Russian gas flows resume? The honest answer is I don't know. Trump says he wants a deal quickly. Putin's talking about ceasefires and demilitarized zones. There are reports of back-channel negotiations. But negotiations are unpredictable. They can collapse. They could drag on. One thing seems clear. Both sides are exhausted. Russia's economy is strained by sanctions and war costs. Ukraine's tired of fighting. Europe wants cheap energy. The U.S. wants to move on to other priorities like China, that there's motivation on all sides for peace. My guess, and it's only a guess, is we could see a ceasefire or preliminary peace framework within the next 6 to 12 months. Maybe sooner if Trump pushes hard. But even if peace is announced, it takes time for sanctions to lift, for pipelines to be inspected and reactivated, for gas flows to resume. We're probably looking at 12 to 18 months from peace announcement to meaningful gas flows. That's 2026. Late 2025 at the earliest, 2026 more realistically. And here's what's important for investors. You don't wait until the peace deal is signed to buy these stocks. By then, it's too late. The market prices in future events months in advance. The moment serious peace negotiations start, the moment there's a ceasefire announcement, these stocks will move. They'll gap up 20%, 30%, 40% overnight. So you position now before it's obvious to everyone. Now let me talk about the risks, because there are always risks. What if peace talks collapse? What if Putin demands too much and Ukraine refuses? What if European governments refuse to lift sanctions even with a ceasefire? All possible. If peace doesn't happen, if Russian gas doesn't return, European energy stocks will remain under pressure. High natural gas prices will continue to squeeze margins. The stocks I mentioned, they might not move up. They might even move down if the war drags on for years. But here's how I think about risk. These stocks, they're already priced for a bad scenario. Most of them are trading well below their fair values. TotalEnergies, ENI, Repsol, Equinor, they all offer high dividend yields, 6% to 13%, because the market is skeptical about European energy. The market thinks high gas prices are permanent. So even if peace doesn't happen, you're getting paid to wait with those dividends. And if peace does happen, the upside is enormous. That's asymmetric risk. Limited downside, massive upside. That's my favorite kind of bet. I don't need to be certain about the timing. I don't need to know exactly when peace happens. That I just need to be right about the direction. And the direction seems clear to me. Peace talks are happening. Motivation exists on all sides. And when peace comes, European energy stocks will explode higher. Let me give you a specific portfolio idea. If I were building a position in European energy today, here's what I'd do. I'd put 30% in TotalEnergies. It's the most diversified, the safest, the highest quality. It has oil, gas, refining, and renewable energy. It's not just a bet on natural gas. It's a bet on European energy broadly. I'd put another 30% in Equinor. Yes, it's exposed to the risk of Russian gas returning and compressing prices, but it's also the highest dividend yield and one of the lowest cost producers. Even in a lower price environment, it's profitable. I'd put 20% in ENI. Italy's going to be a big beneficiary of lower gas prices. Italian industry needs cheap energy desperately. ENI is the national champion, and the government will support it. And the 9% dividend yield gives you income while you wait. Then I'd put 20% in Repsol. Spain's been importing huge amounts of expensive LNG. If Russian pipeline gas returns and European prices fall, Spain's energy costs drop dramatically, and Repsol benefits enormously. Plus, it's already showing momentum with a 30% gain this year. That's a diversified portfolio across 4 countries for different business models, but all exposed to the same thesis. Peace in Ukraine, return of Russian gas, collapse in European natural gas prices, explosion in energy stock profitability and stock prices. If I'm right, this portfolio could return 100%, 200%, maybe even 300% over the next 18 to 24 months as peace unfolds and gas prices normalize. Now, I know what some of you are thinking. Warren, what about the energy transition? What about renewables? Aren't fossil fuel companies dead? Won't governments keep pushing for wind and solar and phase out natural gas? Look, I'm all for renewable energy. It's the future. But the future takes time. Europe's not going to run on 100% renewables for decades. They need natural gas as a bridge fuel. The International Energy Agency projects global natural gas demand will keep growing until 2030, then plateau. We're not at peak gas yet. We're still in the growth phase. And here's the reality. European governments are pragmatic. When energy prices spiked in 2022 and 2023, when factories were shutting down and citizens couldn't afford heating bills, those same governments that were pushing hard for renewables, they started firing up coal plants again. They delayed nuclear shutdowns. They did whatever it took to keep the lights on and costs down. Energy security trumps climate goals when times get tough. So if peace brings cheap Russian gas back, European governments will take it. They'll import it. They'll burn it in power plants. They'll use it for heating and industry. And they'll keep investing in renewables on the side. It's not either or. It's both. And the companies positioned to benefit from natural gas, they're going to make a lot of money for shareholders during this transition period. Let me close with this. I've been investing for over 70 years, and the biggest opportunities I've seen, the ones that made the most money, they always involved a major change that most people didn't see coming or didn't believe would happen. The fall of the Berlin Wall, the opening of China, the shale revolution in the U.S. Peace in Ukraine could be another one of those moments. A major geopolitical shift that transforms entire markets and industries. European energy stocks are beaten down. They're unloved. They're offering high dividend yields because the market doesn't believe things can get better. But if peace comes, if Russian gas returns, if European natural gas prices fall 60% to 70%, these stocks will explode higher. Not might, will. Because the math is simple. Lower costs, higher margins, higher earnings, higher stock prices. The question is, do you have the courage to position yourself now, before it's obvious to everyone? Do you have the patience to wait 6, 12, 18 months for this to unfold? Most investors don't. Most investors wait until it's certain, until peace is signed, until gas prices are already falling. And by then, the stocks have already doubled. They've missed the opportunity. I'm not waiting. I'm positioning now, not with everything, not recklessly, but with a meaningful allocation to European energy stocks that will benefit enormously from peace. TotalEnergies, Equinor, ENI, Repsol, high-quality companies, strong dividends, massive upside if I'm right. If you're thinking about your portfolio, if you want exposure to what could be one of the biggest energy market transformations in decades, consider these stocks. Do your homework. Understand the risks. But don't wait until everyone else sees what's happening, because by then, the opportunity will be gone. Peace is coming to Ukraine. The only question is when. And when it comes, European energy stocks are going to make a lot of people wealthy. Make sure you're one of them.